Could you actually set yourself up to retire in a year using XRP and do it tax-free? Not by gambling, but by understanding structure, timing, and tax law. In today's economy, you might think this is a pipe dream, and while it would require some serious appreciation of Ripple or other altcoins, today I'll show you exactly how this can be done legally through the right retirement accounts, tax bracket, timing, and a few simple rules the IRS won't tell you. And yes, we'll even run real numbers, how much you'd need invested today, what XRP would have to be worth, and how to protect yourself when you finally hit that freedom number. Let's dive in. I'm Anthony Price, CPA. I run a firm that serves hundreds of crypto investors and entrepreneurs. Inside Altcoin Pro, I teach our members how to make, grow, and protect their crypto wealth legally, efficiently, and profitably. If you want to go deeper, you can book a free strategy call or check out my Crypto Tax Mastery course. Links are down below. Now, let's talk about this 1-year retirement plan. First off, let's clear up what tax-free actually means. And I want to explain that effective tax planning is also a form of life and financial planning, which means sometimes actually paying 0% is not the best decision for your life and finances. Paying taxes is often a necessary evil to accomplish more important life goals. That said, there are 3 flavors of free in the tax world. One is tax deferred. You pay later. That's your traditional IRA or 401k, or the effective result of using the HIFO cost basis method of crypto accounting. 2, tax exempt. You pay now, grow forever tax free. That's your Roth IRA or Roth 401k. 3 is territorial taxation. Move to Puerto Rico and qualify under Act 60, or to the US Virgin Islands and qualify for one of their tax incentive programs, you could pay 4% in PR or 2% in the USVI if you actually relocate and meet all residency tests. And when I say 1-year retirement, I'm not saying get rich quick. I'm saying get structured fast, so the next move you make compounds without the IRS in your pocket. Next, let's talk about the vehicle. There might not be a better place to own crypto than in a retirement account. But how do you actually hold XRP inside one? If you use a normal IRA or 401k through a big brokerage, Fidelity, Vanguard, Schwab, you can't buy XRP directly. You can only get crypto exposure through ETFs, mainly Bitcoin and Ethereum. Many more are coming out. It's simple and compliant, but no direct Ripple ownership yet. So if you want real Ripple, staking, or even yield farming, you need a self-directed IRA or solo 401k. That's where you can hold actual crypto in your own LLC or custodian wallet, as long as you follow the rules. No self-dealing, no borrowing, and be mindful of the UBIT tax if you're using leverage or mining in the retirement account. And with a self-directed account, it's absolutely crucial to avoid mixing personal and account wallets. That's a prohibited transaction that could blow up your entire retirement account. And remember, when contributing, you can choose either traditional or Roth taxation. With traditional, you get a deduction upon contribution plus tax-deferred growth, but distributions are taxed at ordinary income rates. If you use the Roth version, you don't get a deduction on the contribution, but your future withdrawals are completely tax-free. That's where the magic happens. Seriously, Roth could mean saving 30% or more of your retirement wealth. That could be the difference between living off 10K or 7K per month in retirement. Let's also go over the limits so you don't over-contribute. And remember, the income limits for Roth basically don't apply, because anything you can't contribute to Roth, you can contribute post-tax and then immediately convert it to Roth. That's called backdooring. So for 2025, Roth or traditional IRA, up to $7,000 or $8,000 if you're 50 and above. With a 401k, you can defer $23,500 as an employee, plus $7,500 catch-up if you're over 50 years old, even higher if you're ages 60 to 63, depending on the plan. With a SEP IRA, you can contribute up to 25% of your W-2 compensation when you're an S-Corp, or 20% of your net income as a sole proprietorship or partnership, but that's capped at $70,000 total contribution. With the solo 401k, you get the same employee deferral as a 401k and the same employer portion as the SEP. Let me explain the difference between a SEP and a solo K. With a SEP, you'd need about $280,000 of W-2 wages or $350,000 net income to max it out. Whereas with the solo 401k, you need only $186,000 of W-2 or $232,000 of net income. Remember, the reason why is because solo 401k, you can make both the employer contributions of 20 or 25% plus the employee contributions of $23,500. With the SEP, you can only do the 25 or 20%. That's why I prefer solo Ks over SEPs when you don't have any other employees. 5 years after your contributions, and if you've hit the age of 59 and a half, you have 100% tax-free withdrawals. There's no required minimum distributions. With a traditional account or a SEP, you have ordinary income tax that you pay on withdrawals after 59 and a half, and your required minimum distributions start at 73, which means you must fully liquidate within 10 years of your 73rd birthday. Next in our strategy is understanding capital gains timing and bracket management. Fact, you don't need a retirement account to pay 0% on your crypto gains. Here's where timing gets powerful, because 2 clocks matter. 1, hold your Ripple for over 12 months and you get long-term capital gains rates. 2, keep your taxable income in the right band means you can control your rate. Let's go over 2025 long-term capital gains tax brackets. You pay 0% long-term capital gains under $47,000 of income when you're single, or under $94,000 of income when you're married filing jointly. You pay 15% long-term capital gains single between $47,000 and $519,000, or married filing jointly, 15% is $94,000 to $584,000. Now you hit 20% long-term capital gains single above $519,000, and married filing jointly above $584,000. And remember, the net investment income tax at 3.8% kicks in past $200,000 single or $250,000 married filing jointly. So including the standard deduction, a single filer could realize $62,000 of gains tax-free, or a married couple $125,000 of gains tax-free, as long as you have no other income that you're reporting that year. That's how smart investors top off the 0% tax bracket every year and harvest gains tax-free. So if you have a low income year, you should seriously look into intentionally incurring capital gains, long-term capital gains. Now, how much do you actually need to feel retired? Let's use $2.5 million as a realistic target. The classic 4% withdrawal rule means you get $100,000 per year. Or maybe you'll go conservative, you withdraw 3.5% of your $2.5 million a year, that's $87,000. So if your lifestyle runs $8,000 to $10,000 a month, that's plenty of breathing room, especially if most of your gains are tax-free. And remember, we want this post-tax, which is why Roth or bracket timing matters. Let's talk about the price you need to hit $2.5 million if you invest cash today. So if you invest $25,000 today, you need Ripple to hit nearly $300. If you invest $100,000, you need Ripple to hit $74. If you invest $250,000, you need Ripple to hit about $30. And if you invest $750,000, you need Ripple to hit $10 to make it to $2.5 million. Now let's be clear, that level of appreciation is rare and risky. Even 300 is unlikely in the best case scenario. Lower targets could happen if blockchain truly transforms finance and XRP becomes a core settlement rail, but there's no guarantee Ripple wins or captures that value. This is math, this is not a promise. I'm not saying Ripple's gonna go to 300. I'm not even saying Ripple's gonna go to $10. I have no idea. But a lot of people watching this channel think it's gonna go up, and so you should be thinking about where you're gonna sell in order to meet your retirement goals, because that's what this is about. You know, crypto goes up, but it absolutely comes down. So take profits regularly. What matters most is understanding the framework, so if the big move does happen, you keep it and retire, not lose half of it to taxes. So let's say you built your position, done the math, and you're confident that eventually Ripple or your portfolio will get you to that $2.5 million mark, whether it's next year or 10 years out. At that point, the goal changes. You don't have to keep chasing moonshots. Now it's about protecting what you've built and letting it work for you. When you reach or even get close to your number, it's time to de-risk. Sell enough to lock profits and move a solid portion into cash or maybe even bonds. That gives you stability, liquidity, and breathing room. Keep a smaller percentage in crypto for upside, but set the rest to quietly fund your life. Like build a 2 to 3 year cash or bond runway, so if the market crashes, you never have to sell crypto at a loss. And right now, US Treasuries and investment grade bonds yield about 4%. And that matches the 4% withdrawal rule used in retirement planning. So if your portfolio earns 4% and you withdraw 4%, your net worth stays roughly flat in real terms. Your wealth sustains itself. Think of this as phase 2 of retirement. You're not out of the game, you're just playing defense instead of offense. And here's the mindset shift most people miss. Once you've structured your portfolio and you know you're on track to hit that $2.5 million target, you don't have to grind the same way anymore. You can work less, take on projects you actually enjoy, save a little less each month, or even live a bit better while your investments do the heavy lifting. Or you can keep working and saving more, and maybe you live a $15,000 a month lifestyle, or build a family legacy by working harder for another decade. That's thriving, that's freedom, that's a goal. You're not waiting for a miracle number, you're coasting into it. And when the market finally does what markets always do, when the next big cycle hits, you'll already be positioned, hedged, and ready. That's a real version of financial freedom. You don't stop working because you have to, you stop needing to work. So let's tighten up the safety rails that protect this plan. Understand the risks that come with it. There's sequence risk. Markets can crash early, so keep 24 months of expenses in cash or short-term treasuries. There's volatility risk. Pre-plan your exits. Sell a set percentage every 20% gain after 12 months. There's concentration risk. Once you hit your number, don't stay 100% in one token. Rotate into ETFs, bonds, safe assets. There's compliance risk. For self-directed accounts, avoid any personal use or lending. One prohibited transaction can destroy the entire benefit, your entire retirement. So understand and mitigate these, and you're not gambling anymore. You're operating like a wealth manager for your own life. So here's an actionable roadmap. In the first couple months, pick your vehicle, regular Roth IRA, 401k for ETFs, or self-directed for owning XRP directly. Then clean up your cost basis tracking and your wallet organization. This is both within retirement accounts and outside of your retirement accounts. You need to know how much in gains, how much your portfolio is. So reach out to my team for help if you need clarity on where you're at with your crypto and how to report your crypto taxes. Months 3 to about 4, make sure you're tracking your realized and unrealized gains and losses. And be mindful of that 1-year holding period, so you're mapping your income and deductions to stay under the 0% or the 15% long-term capital gains bracket next year. And after that, you want to stay disciplined, harvest losses during dips, rebalance after rallies. And when you're near your number, trim long-term positions into bonds or cash to build that 2 to 3 year runway. That's how you set yourself up to retire in a year. Not by winning the lottery, but by building a structure that feeds you, protects you, and lasts. Because retirement isn't an age, it's a structure, it's a plan. And when you understand the rules, you can buy back your time a whole lot sooner than you think. So if you want me to help you map your numbers, how much you need, what brackets to target, and how to turn crypto profits into long-term tax-efficient income, join Crypto Tax Mastery or book a strategy call. Links are in the description. To growing and protecting your wealth, I'm Anthony Price, CPA. See you in the next video.